What's up, everyone, and welcome to the daily macro update for Thursday, February 12th. I apologize about the tardiness there. I was just finishing a video, got through the entire video, and when I was reviewing the audio decided to cut out halfway through, and so I had to redo literally half the video. So that's the reason for the tardiness there. I'll be able to publish that after this live stream. But anyways, getting into the market data for today, we can see that we're having a little bit of a shift here in the macro landscape, more from a more bifurcated type of broadening rally to more of a strict risk off type of environment. Interestingly, we saw earlier this week how we had the large drop off in US retail sales on a year over year rate of change basis, but we're also seeing a large decline in existing home sales, which you can almost look at as a consumer type metric. Although, these types of housing market indicators are pretty laggy, right? They're more of a lagging indicator, but we can still take a look and have a temperature check on what they say. And so, what was interesting here is like, yes, you did see a large drop off in existing home sales, but specifically, what I like to look at is on the Fred data, looking at single family home sales, right? Because this gives you a little bit more of a deeper dive within what the consumer is feeling. And this is a new data set on Fred. So you're not going to have, aesthetically pleasing charts here. But as you can see, pretty large drop in sales. We also have, pretty much a 400,000 medium sales price point for these single family homes, which is not much changed from February of 2025. It did have a little bit of a peak here in June of last year before coming down, but it's been remaining near this like $400,000 mark. Meanwhile, housing inventory has been accelerating as well as the month's supply. And I did post this on my Twitter here, but when you take a look at the stats here, you have sales at negative 4.3%. You have inventory plus 7.8% year over year, and month supply is plus 15% year over year. And so, what is it called when sales are declining, inventory is increasing, but prices aren't coming down? That's a broken system right there. And people are pissed. And this is probably the biggest challenge that this administration is facing currently, as well as what's holding back a lot of the retail participant in the um, in the more trading type of environment of the markets here. And so, very interesting to see that. But also, as well, when you take a look at the United States yield curve, we are continuing to see a bull flattening trend emerge from the bull steepening trend that we saw, right? This bull steepening twist. And typically, when this happens, this is what's called a stalled recovery or a liquidity trap. And so, out of all of the yield curve phase transitions, this is one that can be pretty tricky. And it's happened before, right? You can see some of the years here 2010 through 2012, 2015, as well as late 2023. And essentially, what this is showing is that after aggressive easing and steepening, long end yields roll over as growth signals disappoint and short rates remain pinned. And so this is a shift from reflation fears into more stagnation fears, not stagflation, right? So um, you're actually getting inflation coming down, but you're having stalled growth or decelerating growth. That's not a great environment. Usually that precedes larger drops in the stock market itself. And really, um, the macro triggers is that despite the Fed's help, the economy isn't getting going the way that it wants to, right? Inflation drops, and there's a fear of stagnation taking over by the general market. Stocks typically chop sideways, which is what we've been seeing, and the winners are typically long-term bonds rallying, as well as um, gold. Can do well, but more of the risk-off, aggressive sectors like utilities. And what has been doing well? Look at TLT, which is the ETF for long treasury bonds, 20 years more or more, right? Look at the large acceleration there. And then I'll also put on side by side, look at utilities. Can't really see it because my face is in the way here. There you go. Look at these two charts. There's the bull market here, the new emerging one. Now, obviously, this is limiting options, and it's not as exciting as buying your favorite, you know, um, AI tech stock or quantum computing stock. But hey, you want to make sure that even during times where the market is a little shaky, put your money in things that are going to work, right? And so that's really what we're seeing here in the markets. And this could go, from bad to worse. But I don't want you to think that I'm some type of doom and gloomer because, I'm saying all this not to showcase doom and gloom. But really, this is more of the same of this no landing stop go cycle that we've been in, over the past few years since 2023, right? Right now, we are in the stop phase, which is where you get a hawkish Fed, rate pause, stocks drop, hard landing fears. Oh no, fear in the markets. But then you get lower inflation expectations, and it provides a great buying opportunity. And then once that kind of passes, you have a transition into the go phase, which is where you get more of a dovish Fed, right? Because if you get inflation coming down and you get to that stagnation type of environment, well, what's the government as well as the Fed going to do? Well, they're more inclined to start cutting rates again, which would be more of a dovish Fed. We would possibly get those actual rate cuts, or at least the bond market does it before the Fed actually cuts rates. Stocks rally, soft landing optimism, spreads throughout sentiment. That's what we've been seeing ever since 2023. And this is the whole cycle. And then once things start getting heated up again, we get higher inflation expectations. That's typically a good time to sell a lot of the gains that you bought during the fear portion, and then it keeps on going, and this will pretty much happen until we have a full-blown recession. But there's so much liquidity out there, as well as when we take a look at credit spreads, right? Those still remain historically tight, right? Even though they have bounced from the bottom. Look at this. Credit spreads are saying that there's nothing to fear right now. So some people can look at this as a fear mongering thing, and you're getting the mainstream media just pound you with their stupid narratives saying that, oh, this is AI fears, all of the AI is super overvalued, oh no, everyone's gonna lose money. But you don't have to. You can just shift a lot of that weight into things that are continuing to do well, such as utilities and other things like that. And it's not just that. I mean, you have tons of other sectors in the S&P 500 doing well. Look at staples. Oh my gosh. Look at this thing. Industrials. I'm repeating myself every day it seems because people are just not seeing this. Materials. There's a lot of sectors, or 8 out of the 11 sectors in the S&P are in bullish trend. So yeah, there's plenty of opportunity that's out there, but really the big emerging ones are utilities as well as long bonds. So that's what I'm seeing here today in the markets. Bitcoin is still not having a good time out there, but that's okay. We're not long Bitcoin. The S&P 500 having a pretty decent drop today. Let's take a look at the volume on that. Accelerating volume. Getting close to the low of the trading range for today. A little bit of a spike up in the VIX. Let me see where it closed actually. The VIX closed above 20. So, yeah, not the greatest thing in terms of, if you're trying to look for things to buy dips on. I did buy some gold today, though, with GLD. We'll see what happens with that. But, yeah, take a look at Apple too. Man, that's a pretty large dip there. Not as crazy on volume, though. Let's see, right to the low of the trading range. Look at that. Look at that. 262 was the low of the trading range today, and it's at 261.60. That's awesome. Let's see. Yeah. So that's pretty much what we're seeing in the markets here. ITB versus the S&P 500. Man, that thing is just ripping as well. There's so many bull markets right now. I don't know why people are complaining. Like, this is great. Lots of opportunity to make money right now, even though you're going to see lots of red in the news headlines. Yeah, I don't get it. But yeah, we can get into some questions here. I know that this will be a shorter live stream only because for those that don't know, well, I won't get into the details, but just doing a move tomorrow, moving. So I have to do some things here this afternoon in order to prep for that. But yeah, we'll close here in about 5 minutes, but I'll take some questions. How much is the Fed really helping? Well, they're doing the opposite. So I also posted this today, which was pretty interesting. Take a look at this chart real quick. This is the 10-year US government bond yield. The 10-year we like to pay attention to because that's really where rates like 30-year fixed mortgage rates, as well as credit card APY, the things that you and I care about that actually affect us, the 10-year is usually the thing that you want to follow. And what's interesting is that ever since the Fed started cutting rates again back in September of last year, 2025, what did rates do? They actually increased. And then just this past Fed meeting a few weeks ago on January 28th, when they stopped cutting rates or they entered in their pause 2.0, rates have come down. So as you can see here, the bond market is in full blown rebellion against what the Fed is doing, which is not necessarily, you know, what typically happens. So pretty interesting stuff there. Is there a ticker to short the SPY ETF? Yeah, just Google it. Thanks, Matthew. Appreciate it. Hey, Johnny, good luck on your move. Congrats. Thanks. Are you still bullish on JPM and XTN? Well, the sector, um, the financial sector did go bearish, so no. This was a quick whip up. I never really got a chance to buy any of this because it was such a quick move. But yeah, it is interesting how it's not on accelerating volume though. But yeah, just waiting and watching. There's better things to own than something like JPM at this current moment in time. But we are bearish on the financial sector currently. XTN, that looks a lot better. Yeah, that provided a buying opportunity today. Yesterday, I asked about the jobs revisions. Why did the markets react negatively like they did last year? I don't know. Who cares about that? Could you explain what the MOVE index shows? Yeah, the MOVE, this is essentially the VIX for the bond market. So this is showing bond market volatility. And when this is in bearish trend, that typically is a good scenario for, the credit markets as well as the bond market in general. And so, yeah, bond market volatility has been in a bearish trend, and that's really what you want to see. Take it looking at 2022 during that bear market. What did the MOVE index do during that 2022 bear market? It exploded higher. So, with the MOVE index and a bearish trend, that's what you want to see. And why it gives my team and I, a lot of confidence that there really isn't a lot of underlying stress being priced in to the underlying credit markets and things like that. So, um, yeah, this could be just more of the same of the stop go cycle that we've been doing over the past 3 years here. So, just get ready. Just get ready. The Fed are creating inflation as they keep interest rates. Blah 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 blah. Blah. Sweet. Okay, let's see. Let's go over to Instagram real quick and then we'll wrap it up. Should I invest in stocks? What's the recommended investment strategy? Well, if you're asking for what our investment strategy is, what you can do is you can learn about it by going to macro-optics.com with our website here. You can take a look at what we're all about. But more specifically, if you want to learn more about how we implement our process, we have our 6 week macro mastery challenge. This is a 6 week execution accelerator, right? Because you have enough information, you're more than likely kind of information out by this time, right? I mean, you just have so much things being thrown at you that it's like analysis paralysis and you're kind of frozen. Well, that doesn't do you any good having all this information if you're not actually translating that into profits. What good is it? And so, what this macro mastery challenge does is it allows you to filter through a lot of the noise, get rid of that analysis paralysis, and actually execute on a proven process that will stay consistent for you, get rid of your own emotions, and help you actually continue to, um, you know, keep your gains up no matter what the market is doing. So I would highly recommend checking that out. Um, yeah, it's free if you complete it. Are your courses for beginners? This isn't a course. This is a community, an investing community. Um, But, yeah, I mean, it's for all experience levels. It doesn't matter if you've been trading for 10 minutes or 10 years. Because a lot of investors who've been trading for a while, well, now some of them may be incorporating more macro analysis into their process, but it's still not full blown. Like a lot of people are still so used to that period between 2008 and 2020, where macro analysis really wasn't that important. But now that we're in a period of higher inflation as well as higher interest rates on average, the macro has become more important. So I would highly recommend, if you guys don't have a community yet that's supporting you on the macro front, go ahead and check us out. But if you already have a group that you like that's giving you a lot of macro data strategies, if you're focused on crypto, at least make sure that you're getting some macro perspectives on there so that when Bitcoin is bearish, and so that you can put some profits into USDC or a stable coin, collecting interest, that sort of thing. We have a lot of crypto people in our community as well. But the great thing about macro is that it doesn't matter what specific thing you're focused on or what specific execution you're focused on, whether that's, you know, trading options or, just scalping, or maybe you're just focused on leverage trading in crypto, whatever, you have to know what the macro is doing. So highly recommend checking that out. For those who are on YouTube, you can check it out. You can check it out using the description below, the link down there. Is crude oil a buy? I mean, taking a look at the ETF USO, I would say yes. Good call out, Matthew. Yep. Good on you. Okay, we're going to go ahead and wrap it up there. I appreciate everyone for joining here. I'm going to be busy for the next few days. And so hopefully we'll have the new office set up ready to go by the Sunday macro wrap up. That's my goal. But if you guys have any questions, you can shoot us a DM on Instagram, or if you want direct access to myself and my team, again, you can check out our 6 week macro mastery challenge and gain instant access there. But I appreciate everyone for joining. Good luck out there, and we will catch you on Sunday's Sunday macro wrap up. Bye, everyone.